All right, before we jump in, just a quick but really important heads up. This explainer is for educational purposes only. It is not financial advice, so please always do your own research.
Hey everyone, and welcome. I am so excited to be kicking off this brand new series, DexFi Daily Health. This is our very first explainer, and it's designed to show you exactly how we're going to track the performance of your DexFi bonds every single day.
So let's get right to it, okay? Let's tackle the one question that is on every single bondholder's mind, especially when the market gets a little crazy. Are my DexFi bonds healthy? Well, this whole series is built to answer that one question, with data, with clarity, and with consistency.
And how are we going to do that? Well, it's pretty simple, actually. Just think of this series as your daily doctor's checkup for your investment. Every day, we're going to check the vital signs, we'll look at the charts, we'll explain what we're seeing, and we'll give you a really clear assessment of the overall health of the protocol.
So here's our game plan for today. We'll kick things off with the why behind this daily checkup. Then, we'll dive into the 3 vital signs and the supporting metrics that give us the full picture. After that, we'll get into how to read the report, what's healthy versus what's a warning sign, and finally, we'll tie it all back to what it means for you.
All right, let's officially get started. You know, this is all about giving you the tools you need to feel confident. By the end of this, you're going to understand exactly what numbers we're looking at, why they matter, and how they all weave together to tell the story of your investment. No more guessing, just clear, daily insights.
Okay, now for the absolute heart of our daily report, the 3 vital signs. Seriously, just like a doctor checks your heart rate and blood pressure first, these 3 metrics are the foundation of everything we do. They give us the most critical information right up front.
And here they are, the ETH Ratio, bond purchases, and the APR. The ETH Ratio, that tells us the true performance against ETH. Bond purchases show us demand and conviction. And APR, well, that measures the earning power from trading fees. Let's break each one down.
First up, and listen, this is the big one, is the ETH ratio. Here's the most important thing to remember. This is not about the dollar price. The ETH ratio tells you how much ETH each of your bonds is worth. It is, without a doubt, your #1 primary health indicator because it cuts through all the noise of the dollar's price swings and shows you how the altcoins in the fund are actually performing against ETH.
Now check this out, because this slide perfectly shows why we are so focused on the ratio. So in this scenario, ETH has a fantastic day. It's up 6%. And hey, your bond's dollar price is also up 2%, which feels great, right? But the reality is the ETH ratio went down 3%. That means the altcoins in the fund actually lost ground to ETH. The big ETH pump just hid that fact. We're always going to show you both so you get the complete unfiltered story.
Our second vital sign is bond purchases, and this one is all about the vibe, the market sentiment. It answers a simple question. Is new money flowing in? Are people buying more bonds because they believe in the strategy, or are they selling? Seeing steady purchases, especially when the market is down, is a really powerful sign of confidence.
And our third vital sign is the APR. Think of this as the earnings, the cash flow your bonds are generating just from the trading fees in the system. Right now, it's hovering around a very, very healthy 42%. This number tells us if the underlying strategy is actually working and generating real, sustainable yield.
But there's a really key detail about that APR. Right now, on purpose, it's actually lower than it could be. You see, all the fees that are generated get split right down the middle. 50% is paid out to you as yield, and the other 50% is automatically compounded, meaning it's reinvested for you to buy more assets at these low prices. It's a very deliberate, protective strategy for a bear market.
And this is where the strategy gets really smart, because it adapts. In the current bear market, we're doing that 50-50 split to focus on compounding and lowering your cost basis. But when the bull market really kicks in, that split is going to change to 70% paid out to you and only 30% compounded. That means a much bigger direct APR for you when times are good. It's a dynamic system. Okay, so we've got our 3 big vital signs. But a good doctor doesn't stop there, right? They ask follow-up questions. That's what our supporting metrics are. They don't tell the whole story by themselves, but they give us some crucial context. For example, we track chain distribution. Right now, about 89% of the fund is on base chain. That's good to know for understanding concentration risk. We also track the total value locked, or TVL, to see the overall size and stability of the fund, plus 24-hour volume, which is a great hint about future fees, and vault concentration, so we know our exposure to any single token.
So now that you know what we're tracking, let's talk about how we're going to present it to you each day.
We've designed these reports to be super clear, super consistent, and something you can digest in just a couple of minutes. Every report is going to start with a dashboard just like this. In a single glance, you get all the key numbers, the bond ratio and its daily change, the dollar price, ETH price, the current APR, and the total fund value. Those little arrows tell you the direction of movement instantly. It's your complete snapshot for the day.
Of course, what good is a checkup without the diagnosis? So we've put together a really clear framework to help you interpret the numbers. Let's look at what we consider healthy signs versus what might be a warning sign that means a closer look.
It's pretty straightforward. On the left, in green, you've got the healthy signs, a stable or even rising ETH ratio, steady bond purchases, a consistent APR, and high trading volume. That's what we love to see. On the right, in red, are the warnings, a sustained decline in the ratio over several days, zero or negative purchases, a dropping APR, and collapsing volume. This is your mental cheat sheet.
Okay, I need everyone to really lean in for this part, because it is probably the single most important concept to understand today. In a bear market for altcoins, some decline in the ETH ratio is absolutely expected. Altcoins almost always bleed against ETH in a downturn. This is not an automatic red flag. What we'll be watching for is whether the decline is normal for the market or if it's something worse. Context is everything.
All right, we've covered the metrics, the report, the signs. Let's bring it all home. What does this daily checkup actually mean for you and your investment strategy?
Well, this report is useful no matter what you're doing. If you're holding for the long term, it gives you the data to stay the course with confidence, without panicking on red days. If you're looking to buy more, it can help you spot potentially good entry points when the ratio might be low, but the other vitals still look healthy. And if you're thinking about selling, it helps you understand if you're looking at a temporary dip or a more serious fundamental decline.
And that's it. You now have the full playbook. You know the 3 vital signs, the supporting metrics, and exactly how to read the daily report. Tomorrow we are publishing our very first official daily health report. I really hope you'll subscribe and turn on notifications so you don't miss it. Let's start tracking DexFi's health together.
And of course, we'll end with our full disclaimer. Please remember, all investments, and that includes DexFi bonds, carry risks. This can include the potential for loss of principal from price movements. And past performance is never a guarantee of future results. Thank you so much for joining me for this orientation, and I'll see you tomorrow for day 1.